and welcome you with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. Market ends flat amid high volatility. Sensex extends losses to a fifth day. Nifty near 17,000. Banks, metal stocks drag. Oil and gas gain. Adani Group set to invest $100 billion in the next 10 years. Chairman Gautam Adani says 70% will be invested in green energy to set up 3 gigafactories and triple the renewable power generating capacity. Is the industry of online gaming involving wagers going the cryptocurrency way in India? Tamil Nadu passes an ordinance to ban the games. The $2 billion industry argues that it is not gambling. Big win for Make in India. Swedish defense products company Saab to set up manufacturing to make its Carl Gustaf M4 shoulder-fired missiles from 2024. Is online gaming involving bets and wagers, or stakes as they are referred to, headed the way of the cryptocurrency sector in India? This is what everyone is talking about after the Tamil Nadu cabinet passed an ordinance banning online games with stakes in the state. Though the policy approach for the gaming industry is not draconian as yet, several states, particularly in the south, are putting the squeeze on the industry.
This was the meeting of Tamil Nadu cabinet chaired by Chief Minister M.K. Stalin, which brought the hammer down on the online gaming industry in the state. The cabinet took the ordinance route after the Madras High Court last August overturned the state government's November 2020 ban on online games involving transfer of money. The state government has appealed against the High Court order in Supreme Court, which has issued notices to all parties concerned. The matter is expected to be heard in the next couple of months. Tamil Nadu is just one of the states which is rallying against online games involving stakes. The other southern states of Kerala, Karnataka, Andhra Pradesh and Telangana have passed similar legislations, some of which have been shot down by the high courts of Karnataka and Kerala. According to the states, while games may require some skills, the use of money makes them gambling. Overall, according to a report, real money gaming comprised nearly 70% of the 10,100 crore rupee game industry in the country last year. While fantasy sports saw a revenue increase of 26%, money spent on rummy rose to 28%. The games are especially popular in the southern states. Let's listen to a conversation Business Today TV had with the founder and CEO of Games 24/7 some time ago.
You do have, when it comes to state level policy making, I would say the best way to describe it is some sort of confusion, and also a lack of recognition, I think, in some sense of how huge the space can be. Today we are a $2 billion market. By any meaningful estimate, we're talking $25 to $30 billion by 2030. Today the industry employs about 50,000 people. That could well be 1 million people by 2030.
Meanwhile, the general mood across the nation seems to be against these online games involving money. 66% of those polled by Business Today television thought that the Tamil Nadu government was right in banning these games. The central government is also taking a similar view and is working towards regulating and further taxing the online gaming industry. There is a possibility of GST levied on these games being hiked to 28% from the current 18%. A decision which could be taken as soon as next month. What has really upped the stakes are recent GST notices to gaming companies, including one for 21,000 crore rupees to Gamecraft Technologies, all part of the GST probe agency's action against the entire online gaming industry in India. The agency is hoping to recover a whopping 2.5 lakh crore rupees in taxes. Bureau Report, Business Today Television.
So what's the big difference between online gaming with wagers and online gambling. There's a lot of talk that the games require skills which gambling does not. Business Today TV's global business editor Udayan Mukherjee discussed this with founder and CEO of one of the biggest gaming companies in India, Harsh Jain. Listen into a slice of that conversation.
You have sporting games and you have non-sporting games. I mean, to play the devil's advocate, some people would say, you know, poker involves some skill as well, but poker is considered gambling. So what is the line which divides betting and non-betting, fantasy sports versus true online gaming or betting?
I think that's up to the courts to decide, and the regulators. If India passes regulations from the government side, or until then, the courts can decide if a game can be proven to have predominance of skill over chance, then by our law it is a game of skill and not gambling, betting or wagering. So I don't think I am qualified to answer that question. I think the Supreme Court is qualified, and they have answered it for fantasy sports. And I'm sure there'll be other games that will either get to Supreme Court, will be challenged and will be answered, or I actually personally prefer that we've been advocating it for a while, that the government looks at gaming and sets up a regulatory body. And I believe that it's the far-sightedness of this government that they are able to create a regulatory body now. And our Honorable PM and Honorable FM have already announced within the last budget and after the budget that India is a gaming powerhouse and we can be much, much larger. And for the first time, the government is looking at recognizing gaming in an official capacity and regulating it properly. So we welcome that move. We've been advocating it with our own industry body. The industry is created called the Federation of Indian Fantasy Sports, FIFS. And we welcome any common sense regulations in our sector.
By when do you see that happening, a regulatory body, Harsh, for online gaming as an industry? Because, you know, this recent EGOM recommendation of 28% GST, it reminds you of what happened in the budget with cryptocurrencies, for example, because there seems to be a part of the government which wants to tax anything to do with gambling, betting, gaming, cryptocurrency quite heavily. But do you see the regulatory body that you're recommending actually being on your side, or actually the taxation laws being actually very onerous and heavy for your industry going forward?
I believe that the government needs to set the right amount of taxation that can balance out the weighing scale in terms of benefiting the industry with the right regulations to ensure that only the fly-by-night operators are not prevalent, and it's the real operators who are following the laws of India and are providing real engagement and value to Indians. They can actually thrive with these regulations. But yes, of course, in any industry, if taxation crosses a point, then businesses starts really suffering. And that's where we've also seen sometimes the money moves away from the official industry to an unofficial industry, where the government in fact loses out all of the revenue. And I believe that the government knows this very well, and they're hopefully taking the right moves, that even if the taxation goes from 18% of our revenue to 28% of our revenue, that would of course be a hit to our business metrics. But I personally would welcome that as a right step forward to regulate the industry and to grow it further hand in hand with the government. The industry already accounts for about $1 billion of tax that we pay in India, the entire online gaming industry. And this would help increase taxation, help show that Indian gaming can actually provide a lot of value to the exchequer, but at the same time regulate it so that only the legal operators are providing the service to Indians, and it protects the end consumer.
Markets ended in the red for a fifth straight day. It was a flat close after a choppy session. Sensex slipping 38 points to shut shop at 57,108. On the other hand, the Nifty was able to hold on to 17,000. Losses in auto and metal shares offset gains in pharma and FMCG stocks. Hero Motorcorp, Adani Ports, Titan, Tata Steel and SBI Life were the top Nifty losers. On the upside, Cipla, Tata Consumer, Shree Cement, Power Grid and IndusInd Bank were the top blue chip gainers. The dollar continues to dominate the currency market. The greenback is at a 20-year high. A third back-to-back rate hike of 75 basis points by the US Fed and a persistent hawkish tone of its policymakers have powered the spike in the dollar index, leading to the rupee touching record lows. But what is the dollar index and what is its relation with the rupee? My colleague Sakshi Batra here to take you through all the nitty-gritty details.
Well, the rupee is trading near its all-time low levels. It touched a record low of 81.87 on September 26th, and this was because of multiple reasons, the primary reason being the strengthening US dollar, which is now hovering at fresh 20-year highs. But why is the US dollar on a march? Putting pressure on the other currencies, including the rupee, which has now crossed this 81 mark as well. Well, the reasons for the sharp rise in the US dollar are flight to safety, dollar being considered as a safe haven amid the fears of recession, and rising dollar yields because of the monetary tightening by the US Federal Reserve. Now, while the rupee has depreciated 8% year to date, the dollar index has appreciated 18.8% over the same period. Remember, but this is not just about the rupee. The other major currencies across the world too, which have corrected against the US dollar as well, from Chinese yuan to South Korean won, the euro, pound or Japanese yen, all have corrected 13 to 20% versus the dollar on a year-to-date basis. Now, what exactly is a dollar index, you ask? The dollar index was created in 1973 by the US Federal Reserve. The US dollar index, or USDX, in simple terms, is a measure of value of the US dollar relative to the basket of foreign currencies. The 6 currencies included in the index are often referred to as America's most significant trading partners, which include the euro, Japanese yen, Great Britain pound, Canadian dollar, Swedish krona and Swiss franc. Now, the index is currently calculated by factoring in the exchange rates of these 6 foreign currencies relative to the dollar. The value of the index is a fair indication of the dollar's value in the global market. Now, a rise in the index value really denotes that the dollar is gaining, and a fall in the index value denotes a depreciation in the dollar's value. Now, the US dollar index has risen and fallen sharply throughout history. It reached an all-time high in 1984 at 165, an all-time low of 70 in 2007. Now, over the last few years, the dollar index has been relatively range-bound and traded between the 90 to 110 mark. Now, US index has an inverse correlation with the Indian rupee. Whenever we see the dollar index surging, it leads to pressure coming in on the Indian rupee. Now, this index is also affected by macroeconomic factors, including inflation, deflation in the dollar and the foreign currencies as well. And USDX can also be used as a proxy for the understanding of the health of the US economy, and traders use it to speculate on the dollar's change in value or as a hedge against the currency exposure elsewhere. Now, a dollar is strong right now. It is good news for US but not for the world, because it pushes up the prices of imported food and fuel and medicines, and also threatens to discourage the foreign investment into the emerging markets like India, which actually explains the current correction that we are witnessing in the Indian markets.
All right, thanks for that, Sakshi. The new safety standards for electric vehicles will not be implemented from the 1st of October, with the Ministry of Road Transport and Highways deferring the deadline. The new notification now talks of implementing new rules in 2 phases from the 1st of December and the second phase from 31st of March next year. For more information, we have my colleague Chetan Bhutani with us. Chetan, take us through the changes and what this implies.
Well, that's right. Business Today TV was the first to report the story on September 20. In fact, the government has in fact given a relief to the electric vehicle industry, and the government has announced that they have extended electric vehicle battery testing standards. Well, now these norms will be implemented in 2 phases. The first phase beginning from December 2022 and the second phase beginning from March 2023. Well, the government had announced on September 1st that the additional safety norms would be applicable for battery cells, battery management system, which of course is the backbone of any electric vehicle, design of the battery pack and few components that are critical to the safety of electric vehicles. Remember, there was a lot of safety issues pertaining to the fire incidents coming out in the country. Well, the industry had earlier said that some of the norms need more capital investment and time to be implemented. However, the government has now listened to them and given them more time to implement these rules. But in fact, last week, Road Transport Minister Nitin Gadkari had also met few electric vehicle manufacturers. But yes, it's a significant relief to the EV industry. But the government is, of course, also concerned that what if, till that time, electric vehicles don't catch fire, and of course, what next will happen on that.
Has sharply cut the growth estimate for the East Asia and Pacific region for this year. The Washington-based World Body expects the region's growth to slow down to 3.2% versus its earlier estimate of 5% in April. The region includes China, and the slowdown in the big part is because of the draconian anti-COVID lockdowns implemented in the country, leading to a huge dip in industrial output and exports. China's growth rate is expected to slow to 2.8% from 8.1% last year. The Chinese economy is likely to pick pace again next year, with the World Bank expecting it to grow at 4.5%. Tata Motors has launched 3 new commercial pickup trucks in the Indian market, namely the Yoda 2.0, the Intra V20 biofuel and the Intra V50. The pickup trucks feature a new, while also claiming to offer the highest load carrying capacity, largest deck length and longest range in the segment. Karishma Sudhani spoke to Girish Wagh, Executive Director at Tata Motors, on the company's portfolio plans in the segment and investments that are in the pipeline. Listen in.
How do you see the CV segment going forward, especially, of course, in the pickup space? This, of course, adds to your order book, but further going, how does the portfolio look like? Are we bracing for further launches also?
You see, we will continue our development push, right? We will keep on coming up with either newer products, or we will keep on improving the performance levels of the current products. So that's something which is very clear. This will ensure that we are aligned with the changing requirements of the customers or the changing needs of the country at large, right? So we will continue to do newer developments. Now, as far as pickups is concerned, with the launches today, we believe that we have a very comprehensive range which addresses whether it is rural requirements, semi-urban, urban requirements, all kind of usages, whether it is agri-produce, poultry, construction, water, whatever it may be. I think it addresses almost all the requirements. Going ahead, we will see, what more requirements are coming up, if there are any further white spaces, and we'll keep on addressing those. Right.
Girish, you have time and again, of course, focused a lot on the EV concept, and that's going pretty strong in India, with Prime Minister also setting a clear goal on it. How do you see Tata Motors paving its way through the EV developments across the country?
So, I think zero emission vehicle transition is an irreversible trend now, and the government has been key in terms of igniting this trend and also pushing it. I think FAME Phase 1, FAME Phase 2 incentives have helped in a big way in increasing the penetration of EVs, especially in buses first, and now it is also getting into the last mile distribution. So the Niti Aayog has come up with a Shunya campaign, which is also going to help push this. In addition to this, I think there are quite a few usages which are kind of closed loop usages, lower range. I think we see a good transition likely even in those segments. In addition to FAME and Shunya, I think the government has also come up with the PLI scheme, which is also going to help us to increase the backward integration and bring the supply chain within the country. So I think both from the demand side and supply side, we seem to be positioned well to ride this electrification transition.
And of course also the fuel prices.
Absolutely. Fuel prices, and also see with every subsequent emission, I think the cost of vehicles is also going up. So cost of